Well, let's take a look at another issue that's still trending on the news wires. They're talking about the decision by the Central Bank's Monetary Policy Committee, which decided to maintain status quo on its rates. We're talking about how it's affecting businesses now with the Chief Executive Officer of Coleman Cable and Wires, Mr. George Onofo-Okon. Good morning, George, and thank you so much for coming on the program.
Good morning, Harriet.
So we're still in the markets, and we're talking about the effects of this recent policy. A lot of businesses have complained over time and asked that the Monetary Policy Committee, take a look at its decisions again and ease its stance on the rates. But at this time, when there was this expectation that maybe there might be a movement and there's no movement at all, what are the businesses like you, operators like you, doing at this time?
I think the problem we're all having is that we have an issue with the CBN position in one way. And in another way, we also don't have an issue with it. Because what the CBN is trying to do is balance the reserve with the actual demand of dollar positions. Now, what the reality that what is happening now today in the last, I'll say 6 months, even last year, is that the FX demand is above supply. So your ability to get what you want, especially for a business like ours or the manufacturers, it's a waiting game. It's like you're in a queue. You have a request for Forex, you're waiting for 1 month, 2 months, 3 months to get the request for Forex. Now, in reality, we have a problem because the income level of Forex into Nigeria, which is Nigeria's dependency on oil, is not enough, especially at oil price today, well below $30 a barrel. It is not helping the situation. Now, you have to expect CBN to try and balance the situation. If you look at what Director Tulip also said last month, is that the focus on the CBN area is on manufacturing, which is real sector, which they focus really on the raw material, the machinery, backlog of LCs, and PMS. Now, my issue with PMS is that today, 78% of PMS brought into the country is NNPC. So why should we're doing swaps. Let the swaps continue. Now, but if we focus on using our dollars to buy PMS, we still have a strain on the remaining dollars that is available. If the focus, they say, is on raw materials and machinery and backlog of LCs, let's totally focus on that and make sure that every manufacturer is getting. Sincerely, no manufacturer in 2015 can say, in reality, it did not get increase in capacity utilization. Now, that is a bit of a positive to the variance between the official and unofficial market. Now, invariably, as much as we try to do fiscal policy protection, which is get custom duty, higher duty, the protection is not as high when you know people that undervalue their positions, especially their commercial values, cannot undervalue with a 300 naira to the dollar. Now, but if I'm getting 200 naira or 210, I have only a variance of 5%. If I undervalue that invoice, I'll get away with it, even if I if I get away with reducing the value by 80% and showing only 20%, and you are charging me 50% duty, you're not going to cover the difference.
So in the days ahead, it seems as if businesses are going to have to tighten their belts more, even though you say the capacity utilization actually improved in 2015.
It did improve. We have to tighten our belts because the difference before is that you're getting the dollars as you request for it. Today, you're getting the dollars 1, 2 months, 3 months after, depending on how well the bank can push for your own transaction. So that is not helping. So which is why everybody was expecting there was going to be a devaluation in this MPC meeting.
But then you see, if you adjust your currency, your exports will not increase because you still haven't gotten to that level where you should begin to see higher exports as against higher imports.
For me, I wasn't expecting an MPC increase of the dollar position. Most likely, maybe by the next quarter one. That's for my own personal opinion. And it did actually work out the way I thought it was going to be. Now, the reason why, if you take what you're saying in terms of import and export, now, invariably, a devalued naira, let's even say 240, 250, which is what everybody is speculating now, happens. Now, you might have an improved position of liquidity for the government in terms of their conversion rate of whatever the low oil price is. But you have to look at it that inflation has been very, very stable in Nigeria throughout even the last devaluation of 24%. We got an increase of less than 0.2, 0.3, 9.4 to 9.6 at the end of the year. Why? Because invariably Nigeria has grown as a real sector industry. The price of beverages it didn't go up. 2008, 2009, price of your drinking beverages went up almost 100%. Today, nothing changed. Because in reality, we have been growing our real sector for the past 5, 6 years. So what the government needs to continue to focus on is quantitative easing. Real sector funds that they've said that was going to come out has not come out yet. 300 billion, it's still in phantom. Now, if you look at even if you read the MPC actual report, the communique itself, it speaks about the European community easing, it speaks about the Fed easing, it speaks about Japan easing. A lot of quantitative easing has been buying back bonds, buying back the currency to try and create quantitative easing. Now, that's one thing I still see missing in MPC reports. What are we doing about easing this economy's strain, easing that growth? Now, if they need to also, as much as we see this report on the position of CRR, the position of dollar position, the devaluation report, we need to see what they're going to do.
But then that's what the CBN has been doing lately. I'm not holding brief for them, but then you see policies that have come out with regards Forex, for instance, stopping sales to Bureau de Change operators to try to reduce the pressure, because when they sell to BDC operators, it puts pressure on the external reserves of the country already. Correct. So you're looking at a situation where you have to provide credits to operators such as yourself, credits to the real sector, and at the same time still fund the BDCs who continue to encourage speculative trading that they've been complaining about in the markets.
Unfortunately, in that respect, I'm a total supporter of CBN. Really, anybody that wants to spend money outside of this real sector, Naira, it's a choice issue. So if you want dollar to travel, it's a choice issue. Now, but in terms of employing and creating employment, we need to think of ourselves first before everybody else. Now, what creates employment? Real sector. The real sector in terms of industry, commercial, and you're talking agriculture. Those are the key areas now that the government is focusing on. And if you look at it, if we find a way of keeping the currency in line to keep real sector growth, invariably by the time even devaluation is coming, and it most likely would come sometime this year, it has to come. Nobody's disputing that. But the timing of it, what we need is that you have to have eased the burden of creating employment and guaranteeing that when you devalue, because you see the difference between Nigeria, we're still import dependent. Devaluation automatically influences inflation in Nigeria.
Yes,
you
practically import inflation.
We import inflation. So now we're all saying the inflation area there's only a 1% or so increase. The actual increase is caused by food, which is the agriculture, which we understand the issue of the Northeast issue is what has created that a little bit of increase in the bottom line of inflation of food. Now, but when you look at the total underlying inflation, you have low oil prices, fact. We have low commodity prices, fact. Now, if you have all these prices in the world coming low, that means in a lucky situation that we're in now, means the raw materials are actually lower. So there's no reason for price increases.
Okay, so now what's next for the real sector?
Now, I think what is next for the real sector is for the real sector to actually push for CBN to actually improve their ability to feed this real sector. The same way they focused on PMS dollar inputs, dollar payments, they need to focus a lot of their team on real sector, raw material, and machinery. Now, guarantee that growth. Then, secondly, make sure that whatever quantitative easing you're focusing on real sector, be it industry, be it agriculture, is seen to be happening now, not after you move the devaluation position of the Naira again. it is not great for us to want to buy dollar at 300 naira. Personally, I don't enjoy it. But it is better for us to take the differential and have a guaranteed 200 naira going for now to the real sector for them to guarantee this employment and this growth in the employment sector, on the employees.
George, thank you so much for coming on the program this morning and sharing your perspectives with us with regards to that decision. In the coming days, we'll continue to see how businesses cope with the developments in the monetary and, of course, with regards monetary and fiscal policies. George Onofookon is the Chief Executive Officer, Coleman Cable and Wires. We'll take a quick break now on the program, and when we come